Good morning from our global headquarters in New York. I'm Manus Cranny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set your agenda.
A final twist with 24 hours to Election Day. An outlier Iowa poll gives Harris the advantage. Oil rises as OPEC delays its output hike, and Iran threatens a crushing response against Israel. And all of that ahead of a pivotal Fed decision just days after the election. Good morning, Manus.
That is a lot for everybody to take on board. But straight to ground zero, I think, where the reaction function is perhaps the most pertinent this morning on this. Some would say an outlier Iowa poll showing Harris at 47% to Trump's 44%. And, of course, Iowa went to Trump in the two previous elections. The question the bond market is asking itself, has it reached too far into a Trump victory? This is all about what deficit you potentially end up with at the other side. So bond yields are down. JP Morgan say traders are trimming their election bets. You've got auctions this week, if you can believe that, 67 billion of 10s and 30s. But ground zero for the reaction function on the Iowa poll is the bond market. Roll over, have a look at the stock market. You've got the strongest stock run of any election year back to 1936. We're up an eighth of 1%. Nvidia is up 2.25%. They're going to replace Intel in the market order. So last week, Mag 7 down by 1.8, saved by Amazon and Alphabet. It's going to be a treacherous week for trade.
It is, and it just shows yet again how this bond market can be whiplashed by narrative. We're used to it being an economic narrative that goes back and forth on bond yields. This time, it's the political narrative. It's an Iowa poll that has brought betting odds finally into the line where polls were. They were so skewed towards a Republican victory, and we're starting to price in a red sweep. This brings it back closer, maybe not to reality, because honestly, who knows what reality is, but at least closer to where the average of polls are.
And then you've got to ask yourself in the bond market, if 430 in the bond markets was representative of a fiscal deficit of 7.75 trillion, or was it representative of a Harris fiscal deficit of 4 trillion? Either way, and nobody really knows where the betting is going on this. But the question is, what is a shock to the bond markets Wednesday morning?
Well, Mike Wilson of Morgan Stanley says that the bond markets will be the thing you need to look at to get your risk gauge, that all things will live and die by how the bond market reacts to the election. We are just one day away from Election Day. The latest poll from the Des Moines Register showing that Democratic candidate Kamala Harris has a 3% lead over her Republican opponent, Donald Trump. You got a little teaser that she was going to be joining us in that opening shot. Here she is now as Bloomberg's Anne-Marie Horder. I mean, Anne-Marie, Harris with Iowa, what do we make of the poll?
So, look, I don't think anyone thinks Kamala Harris is winning Iowa. That has to do with the Democrats I spoke to this weekend, as well as definitely Republicans who view this purely as an outlier, and actually pointed me to an Emerson College poll in Iowa over the weekend that had Trump up 10 points. But this poll certainly has been really a surprise of November, and kind of a fitting way to end a very unprecedented election cycle. What Democrats have told me is that you need to look at this Iowa poll potentially showing some of those shy voters, potentially women. Jay Ann Seltzer, who runs this Des Moines, Iowa poll, said that what she saw is that women, especially women over 65, we know that these women show up to vote, were breaking for Harris at the end, and they're trying to capture a moment of time. But you have to think, she's up now in this poll. In September, she was down on Trump 4 points, and then it was double digits when Trump was versus Biden earlier in the summer. So it's definitely an outlier in the sense that this poll was not what we were expecting, especially when you look at historically this whole season, how Des Moines Register was marking Trump versus Harris. But potentially, it could show strength in the upper Midwest and neighboring Blue Wall State with Wisconsin.
And that's where the focus is going to be in terms of the blue wall for Harris in terms of a victory, trying to sort of make it through there. In terms of the lay of the land today and tomorrow, I mean, the weekend was a whirlwind of just rallies and narratives. So where do we see them in the closing sweep?
Rallies, hot rhetoric. It was an interesting weekend. Harris will be leaving Michigan. She's heading to Pennsylvania. She's spending the entire day in Pennsylvania. That makes sense. If you look at the New York Times Siena poll over the weekend, Pennsylvania is where Trump erased her lead, and he maintains an advantage in Arizona. Trump is doing a different sort of end to the season. He's hitting North Carolina, Pennsylvania, and then we'll end the day in Michigan. Over the weekend, Harris has new strength in North Carolina and in Georgia. For Republicans to win the White House, for Trump to maintain to get to 270, he really needs to make sure he controls North Carolina. North Carolina has not went to a Democrat since Barack Obama in 2008. He wasn't able even to recapture it in 2012. So the fact that potentially Trump is going to North Carolina and we saw some new strength Harris is showing there, he wants to make sure that that remains in the red camp. And he's only doing one stopover in Pennsylvania, which if you look at all the polls and everyone you talk to, it's going to come down to Pennsylvania, those 19 elector votes there. And that is where the most amount of money and time has really been spent in this election cycle.
Meanwhile, the Bloomberg team had a story out over the weekend that Jamie Dimon's wife, Judy Dimon, is out canvassing for Harris, where you have Dimon, who has been reticent to endorse either candidate, besides reporting that behind the scenes he's a Harris supporter. How is corporate America getting ready for this and kind of hedging their own bets?
Yeah, it's an interesting point. So Jamie Dimon, I don't think, unwilling to go door to door for Kamala Harris, but given the fact the New York Times reported that he's not even willing to say it out loud who he wants to vote for, maybe potentially who he's giving money to. But his wife, clearly, she's a Democrat out and about with Kamala Harris. I think what you see is a big hedge over the past few weeks. We saw it from really the tech CEOs. Donald Trump talked about this on Joe Rogan, how Sundar Pichai, the Google CEO, called him after his McDonald's stint to say it was a, quote, hit. We had Trump talking about the fact that Tim Cook recently called him to talk about what was going on with some financial penalties coming out of the European Union. We have Jeff Bezos telling the Washington Post editorial board, like, do not release that editorial that you have planned for saying the Washington Post editorial board was going to back Kamala Harris. There's reports that the Amazon CEO also had a quote-unquote checking call with the former president. So it does seem that corporate America is hedging their bets because, as you can see in the polls, it is a dead heat. We are going into this election where no one really understands with conviction who has the edge.
Look, if last week was all about the Puerto Rico and Latin American vote, if you remember, we came into work on Monday morning and it was about what happened at the final clarion call of the Republican at Madison Square Garden. Here we are, and you see the Muslim community siding or as it were, on stage with Trump. You again see a real focus in some of these smaller minority voting numbers.
Well, when you look at these states in 2016 and 2020 and how they were won, we're talking about 10,000 votes in a state like Michigan. Hillary Clinton lost Michigan in 2016 by 10,704 votes. If those voters that voted for Jill Stein, the third-party independent candidate, instead voted for Hillary Clinton, she would have won Michigan. These margins are so tight, which is why you see each of these individuals going out and trying to make sure they are shoring up specific communities and groups.
And I think it was one of your guests last week that said that this election will be lost and won in the suburbs in terms of where the fight is, going back to 2016 with Hillary Clinton. Anne-Marie, thank you. We're all going to have a busy couple of days. Joining us now is Paul Donovan, Global Chief Economist over at UBS. Paul, we're almost at sort of peak uncertainty in these markets. It's amazing how one outlier poll has shifted the bond market. What would be a VAR shock for you waking up? We may not know the exact result on Wednesday morning, but what could produce a significant VAR shock?
So I think in terms of the markets being shocked, it would be either a blue wave or a red wave, because I think there is sort of an assumption that we're going to end up with sort of divided government. The Senate perhaps goes more Republican, the House more Democrat, and then the White House on top of that. And the point about that is, with divided government, neither candidate for the presidency gets their fiscal policy through. They'll get some of it, but they won't get all of it. And if you have a blue wave or a red wave, then the entirety of the fiscal policy comes through, and that's a slightly different economic outcome. And I think that would be something that would certainly antagonize markets to some extent.
Paul, what about a scenario where the outcome is unknown, where it takes days and weeks? We've already seen within corporate America hesitancy and uncertainty to make any big decisions. If it is something that drags on, could there be lasting scars from that type of uncertain environment?
Well, I think one of the things is that the markets tend to assume an outcome. It would have to be really, really unclear, I think, for the markets to not tend one way or the other. Markets tend to make up their minds slightly more quickly than politicians do. In terms of the damage, if you've got genuine uncertainty, I mean, presumably this does not go beyond January of next year because that's when the president is formally elected. So in that situation, I think you would have maybe a mild delay to investment. But frankly, in the grand scheme of things, this doesn't make a difference economically. We're talking about investment decisions for the long term, and you delay by 2-3 months. It doesn't make a difference, frankly, in terms of economic performance.
Paul, you make it very clear that protectionism is on the ballot. It's top of the ballot. It's what we're drawing all the numbers between Trump tariffs and a status quo under Harris. You dissected into gesture tariffs, selective tariffs, and sustained universal tariffs. Just talk us through the differentials here.
So with gesture tariffs, this is just sort of protecting a politically important industry. It's largely symbolic. You don't get a lot of retaliation with gesture tariffs. Both sides understand that it's primarily driven by domestic politics. And I think you will certainly see gesture tariffs under a Harris presidency. Selective tariffs, that is what happened in former President Trump's term of office, where he was applying selective tariffs to China. Now, the thing about selective tariffs is you can evade those over time because supply chains reroute, and that's exactly what happened with the Trump tariffs in 2018. It wasn't that American industry replaced China. That absolutely isn't what happened. You saw the rest of the world replacing China, and in some cases China replacing China because China just rerouted its goods. So selective tariffs have an impact, but they decay over time. Now, the universal tariff, that's more of a problem, because a universal tariff is absolutely against all imports either in a category or all imports from all countries, which is what President Trump has suggested that he might do. Now, in that situation, you can't see that decay. That doesn't evade because there's no way round that other than by smuggling, which, the US was quite good at in the 1770s when they were defying legitimate British taxes, but it's not something practical in today's world. So you end up then with a far bigger impact. And I think there are potential further impacts that come from a universal tariff, that you might see retailers using that as an excuse to raise prices even more than they have to.
Paul, if I can jump in on that point specifically, because you have been so good on the American consumer. You keep saying don't short the hedonism of the American consumer, and you've been spot on. If we do get the scenario that you're laying out, that retailers move on and put on those prices to the consumer, does that finally dent sentiment? Is that the thing that could undo the continued buying and strength we've seen from the consumer?
Well, we do know from the recent revisions to GDP that the consumer in the United States has got a bit more of a cushion than was originally thought, because the GDP numbers were revised quite significantly, and so they've got more savings. Now, why is that important? That's important because a tariff is a straightforward consumer tax. And so consumers will be paying more money to the US Treasury. It's the US consumers that pay the tariffs. And so that will then reduce their spending power. So real incomes would go down under the Trump trade taxes. The question is, do consumers then tap into their savings in order to smooth consumption out or not? I think that there would be damage to the consumer in this situation, it has to be said. And that's because I think you would see margin expansion by retailers on top of the tariff, so you get more profit-led inflation. That would do more damage to consumer spending firepower. But I don't think it would necessarily be calamitous, because we do now know that there are more savings in US households than had previously been estimated.
Paul, you're one of the best. Thanks so much for joining us. Paul Donovan there of UBS. Let's get to some of the other top stories that are trending on your terminal this morning. Ryanair shares, they are falling after the airline cut its passenger growth target for next year because of delivery delays from Boeing. Ryanair said that 9 aircraft planned for delivery in the third quarter will now arrive in the following 3 months because of that Boeing strike.
Moncler is said to be I'm Burberry. That's according to the online fashion publication Miss Tweed. Industry sources say LVMH boss Bernard Arnault has recently invested in Moncler and is in favor of such a deal. Burberry shares are up following the report.
And casual restaurant chain TGI Fridays filed for bankruptcy over the weekend. It's been struggling due to pressure from increasingly cost-conscious consumers. It's the latest in a string of troubled restaurants filing for bankruptcy.
Coming up in the show, oil prices push higher as OPEC delays its production increase and tensions escalate in the Middle East. More on that right here on Bloomberg Brief. Context matters.
It's your Bloomberg Brief on this Monday morning. Danny Berger alongside Manus Cranny in New York. Oil rallying this morning. OPEC Plus has agreed to push back a December production hike. Add to that escalating tensions between Iran and Israel. Those are also pushing prices higher. 2.8% is your rally in NYMEX crude. For more, let's go out to Bloomberg's Jomana Bersecci, who joins us from the world's largest energy event, ADIPEC, in Abu Dhabi. Jomana, what a time to be at ADIPEC. I know it's difficult to disaggregate what's moving oil more this morning between OPEC and the tensions, but let's just start with OPEC. What have they decided?
Yeah, so this decision came out late last night. OPEC Plus have decided to extend by yet another month the decision to put back 180,000 barrels per day of oil back to the market. There'd been speculation in the run-up anyway to December the 1st as to whether or not they could move ahead with putting extra barrels, and they've decided to just bide their time a little bit longer, take one more month to decide whether or not the market can actually accommodate this extra supply that's about to hit. And of course, the same factors are going to be considered, the ones that we've been talking about the last couple of months, and that is the demand outlook. And remember, OPEC Plus themselves have downgraded their demand estimate next year several times this year. They forecast growth of around 1.6 million barrels per day, still above any other forecaster out there, namely because some of the signals coming through from China have been disappointing. Equally, there are concerns about the extra supply that is coming from non-OPEC producers, the likes of U.S., as you know, under the Biden administration, have been producing a record amount of oil, in addition to new sources of supply from the likes of Guyana, Brazil, all of that about to hit the market as well. So they're in this position where they want to start putting barrels back to the market, but at the same time, they want to keep price stability. And this is an ongoing dilemma for the group. But what we did find out yesterday is that they've just postponed the decision by 1 month or so. Just another note quickly on the geopolitics as well. You're referencing some of the talk that has come out of Iran over the weekend, with Iranian leadership also insinuating that they may be actually looking at a reprisal to the Israel attacks on Iran from a week ago. So again, some geopolitical premium also being factored into the oil markets this morning.
Jomana, good morning to you. I mean, Amin Nasser at Aramco last week saying we're all underestimating the demand from China. So it's anybody's guess. Let's just flesh out a little bit more the tensions. We're talking, this is the Wall Street Journal article on the Iranian strong and complex response is what is expected from Iran. Again, no timing on this, but it again adds a small amount of war premium into this market.
Yeah, absolutely. And, you know, there was just a panel taking place now with some of the biggest energy companies in the world, the CEOs of BP and others on that panel. And they were all talking about the first outlook for China. And that is a big driver of the outlook for oil in the short term. But then also geopolitical conflict. And that is a big risk to the complex as well. I was just speaking to the Indian energy minister myself. And he also said if things really kick off, then maybe you could see a massive spike up in oil prices again. But it's a big unknown at this point. And even some of the smartest people in this industry cannot really foresee what's going to happen from a geopolitical perspective. But what I will tell you, Manus, I know that you've been here at ADIPEC many times. This year, guess what they're talking about? AI. Why does it matter? Data centers consume energy. That's another driver of energy demand. And what the industry leaders are saying here is you can't just rely on one source of energy. It is going to be a full gamut of energy sources providing that energy.
Okay, well, that oil market has bid this morning up 2.65% on Brent at 75.04. Jomana, thank you very much. Jomana Bersecci there in Abu Dhabi. Coming up, Warren Buffett keeps cutting that Apple stake. The value of the holding down 60% in 2024. We'll give you the details. Front page news this Monday morning. There are headlines around the world apart from the US election, but we're going to kick it off first of all with Benjamin Netanyahu's office is accused of leaking to foil the Gaza ceasefire. Now, the Israeli Prime Minister is accused of manipulating public discourse around the war in Gaza to stay in power. An investigation showed officials that include a Netanyahu aide leaked classified documents and exaggerated their significance.
Meanwhile, Manus, the FT has this, that China's lawmakers are gathering to approve long-awaited fiscal stimulus. It is a week-long session for the lawmakers, and they're expected to approve China's largest fiscal package since the pandemic.
It's been pretty piecemeal up until now. A lot of the argument has been, I mean, even Janet Yellen warned on the ability to deliver the growth numbers. Let's round it off. We've got Warren Buffett from the Wall Street Journal cutting, you got it, his Apple stake. Warren Buffett sold more Apple stock in the third quarter. Berkshire sold about 25% of their Apple holding in the third quarter, and that's even after the sales in Apple and Berkshire's largest stock holding at the end of September. But did he sell because he doesn't like Apple?
I don't know. He has $325 billion of a cash pile. Does Buffett know something we don't? It's a question.
There's risks around the corner.
From our global headquarters in New York City, welcome to Bloomberg Brief. I'm Danny Berger alongside Manus Cranny. Let's set your agenda.
A final twist with 24 hours to Election Day. An outlier Iowa poll gives Harris the advantage. Oil rises as OPEC delays its output hike, and Iran threatens a crushing response against Israel. And all that ahead of the pivotal Fed decision just days after the U.S. election.
I think it would be an understatement to say it's a monumental week for this bond market. Elections tomorrow, Fed Thursday, just off of the worst month for the global bond market since September 2022. Yields lower this morning after that poll you mentioned, Manus, in Iowa, giving Harris the advantage, a 3-point lead. Most polls had Trump 9 points ahead. The dollar also falling off the back of that. Bloomberg dollar spot weaker by 0.5%. Stocks, the Nasdaq last week ended its streak of 7 consecutive weekly gains. That was based off of earnings. Today we go tepidly higher, up 0.2% for the S&P. But Manus, I put the peso at the bottom of the screen there. Dollar weaker by the peso by 0.8%. If you want to look for where the highest beta is to the Trump trade, it's clearly not in this equity market. No. The equity market is not bothered by what we're seeing in the polls. It is treasuries, it is currencies.
And then it comes down to how much does the treasury market move by. Let's say it does bounce back and we end up with a Trump or a red sweep. The question is then, do you break 450? And at 450 in the bond market, which is 20 basis higher than where we were at the peak on Friday, how much does that upset the equity market? How much does that upset the bond market? Right now, they've overreached into the Trump trade.
Well, this comes back again to the difference between now and 2016. In 2016, Trump winning was a surprise. You did have this leg higher in yields. This time, we have already had the movement. Yes, we're pulling back today, but how much more further can yields really go if we do see a Trump presidency, considering much of the market has front-run it?
Yeah, it depends who's in the sideline. As you said, a lot of industry had moved their production to Mexico. Mexican peso is the one that you targeted at the bottom of the screen.
Yeah.
All of G10 this morning, all of G10 are rallying furiously. But we are one day away from U.S. election 2024. And the latest poll from Des Moines Register is showing Democratic candidate Kamala Harris with a 3% lead over her Republican opponent, Donald Trump. Let's bring in the team. From Bloomberg, it is our Miami bureau chief, Felipe Marquez, is following the Trump campaign in Florida, and Skylar Woodhouse in Washington, D.C. Felipe, let's bring it to you first of all. We have, some are saying, this outlier poll in Iowa, which gives Harris the lead over Trump. But it's about the body of the research. It's about the women factor and the independent voters. How irked is the Trump camp? Because there's already been some response from Donald Trump on this.
I mean, the main message Donald Trump tried to hammer this weekend is that he's the clear front runner, despite the polls showing he's not. It's actually a coin toss, right? It's actually always in the margin of error. But he tried to hammer this message. He's also spent a large amount of time this weekend suggesting without evidence that the election system is rigged, that the media, the firming polls, they are corrupt and conspiring against his campaign. So that was the main takeaway. But we can also see him playing defense, right? Like, he spent a lot of time in North Carolina this weekend. He'll also be in North Carolina today, which is the only swing state he never lost.
Skylar,
so he's actually trying to
let me bring you into the
himself.
conversation. Apologies, Felipe. I want to bring Skylar into the conversation because we see Harris only specifically concentrating Pennsylvania for the final hours. What does that tell us about her campaign, that she is sticking to that swing state?
Yeah, I mean, look, Pennsylvania is a must-win battleground for both candidates. And Harris, the campaign, they are spending all day today in Pennsylvania. Harris is going to be doing rallies in Scranton, which is Joe Biden's hometown. She's going to be doing rallies in Philadelphia, Pittsburgh. So she really will be crisscrossing the entire state today. And that final push to sort of, and this is what her campaign has said, for a while, is that they are trying to just move the needle, just like the smallest amount could potentially bring them that win in Pennsylvania. And I think the fact that they're spending all day today in Pennsylvania, I mean, over the weekend, she was in Michigan and she was, traveling to other states, but the significance of her being in Pennsylvania today just shows how much that state is in play for the campaign.
And Felipe, just to bring it back to you, obviously North Carolina was the one that he won in 2020. He wants to hold that. The narrative that he put forward over the weekend, I mean, it was very, very wide-ranging. It was not on the core message of the economy. It was on a number of different things. It was like taking some aim at the fake news. It was about trying to sow the seeds of the veracity of this election. What do we get in the closing day today from him?
Okay, so
well, I think for the Trump camp.
Let's go to Felipe
first of all.
and then we'll get you, Skylar.
Do you in just a second?
It's early. Okay, so from Trump today, obviously he's going to be in Pennsylvania. He has 2 campaign stops there. As Skylar just said, it's a must-win state. But he's also going to North Carolina again, which again portrays the defense movement he's making. And he also has a stop in Michigan. So again, we're going to see all the candidates battling across these must-win states. But differently from Kamala Harris, Donald Trump's going to be doing a couple stops today across his campaign in different states.
And Skylar, what is the closing argument that you see coming?
I think for the Harris campaign, one thing that Vice President Kamala Harris has been sticking with leading up to Election Day Eve today is, to quote her, she's always saying it's the contrast between the 2 candidates, between her and former President Donald Trump. I think today she's going to focus on, women's rights. That's been a big part of her campaign, and especially in Pennsylvania, to win some of those white female suburban voters. That's definitely, I believe, going to be a talking point for her today, as they, especially maybe some swing voters are still making up their minds, see if she can move the needle there by talking about women's reproductive rights. I think she'll also, talk about the economy. And, that's been something that she has, what polls show that voters trust Trump to handle the economy a little bit more than they do for Harris. But Harris has made some grounds there, but I think she will still hammer away at that. And then just the main theme of democracy. That's been a big talking point for the Democrats this election season. And I think they're going to really nail that into the ground today, and how, her campaign is about preserving democracy as they, have tried to use that to win over voters who might be concerned what a Trump presidency part 2 could look like.
Felipe, Skylar, appreciate your time so early this morning. Felipe Marquez and Skylar Woodhouse. Now, Politico writing this morning of the fear of a second Trump presidency and J.D. Vance and what it would mean for the business community. They wrote the Ohio senator represents a new kind of conservative right that is skeptical of corporations and eschews the GOP's old free trade ideology. With Vance by Trump's side, some corporate leaders worry a second Trump administration would be even more hostile to their interests than the first was. Joining us now is Elizabeth Pancotti, Director of Special Initiatives at the Roosevelt Institute. Elizabeth, you've done great work looking specifically at how the business community has been getting ready for this election. What do you understand in the type of hedges that they're putting on and preparing for either way?
Hey, good morning. Thanks so much for having me. I think we're really seeing the business community have a lot of uncertainty here, especially in the retail sector. They are hedging. They are making orders for 9 to 12 months from now. There's just a huge lead time. They don't have the time to sit around for another week or two until we have results. And so you've seen retail CEOs say, AutoZone, Columbia Sportswear, and others say, we are making these decisions, sort of hedging that Trump might win and there might be tariffs on China or other countries. And so pricing those things into their decisions. Because Trump hasn't been so clear on what those tariffs will look like, he's range from 10% to 1,000% of where those tariffs will land. It's difficult for businesses to kind of make those purchasing decisions, decide what they'll pass on to consumers, where they might want to shift those orders from. And so there's a lot of uncertainty in the business community about the entire election, but especially on the trade component.
Elizabeth, good morning. Look, we're going to white-knuckle this for at least 3-4 days, we expect. We're not sure when we're going to get the full result. But if we take Trump 1, the version of Trump 1 administration on tariffs, on tax, etc., and then you look at the possibility of Trump 2, can we assume that the maximum disruption is already kind of priced into these markets, or is it a more emboldened Trump that potentially could come back to the White House and it could be a lot more disruptive than people really perceive?
I think it is likely to be a lot more disruptive than people perceive. I think the question on whether the markets have priced it in is a good one. This has been the least volatile, the second least volatile October in an election year in the last 50 years. The S&P 500 is up 20% this year. It's the strongest markets year in nearly a century for an election year. And so we are seeing quite stable and quite good markets, probably because of the economy that we have now. And I think markets are pricing in some level of uncertainty about the election, whether or not they expected the Seltzer poll out from Iowa last week, and what weights they're giving to Kamala Harris versus Trump is a good question. But I think on trade, we are likely to see a much larger package of tariffs and a much more aggressive stance on trade than we saw in the first Trump administration. A lot of those tariffs were kept in place by the Biden administration, and a little bit were added. They were kind of maneuvered there over the last year. But in a Trump 2.0, I think we are likely to see, 5 to 10 times the tariff package that we saw in the first administration, and really a different approach to industry. You also have the tax fight to look ahead to, which could have huge effects on corporate margins, on decisions. Trump has also teased, Republicans have teased repealing incentives for manufacturing, clean energy, semiconductors, and that could really affect bottom lines as well.
Elizabeth, you mentioned, though, that the strength that the U.S. economy is coming from. You have this line in your research. I'm going to be honest, I had to read a couple times because I was in disbelief the first time I read it, that if Harris is elected, she will be the first Democrat president since before Eisenhower to not come in during a crisis as you outlined being a recession or assassination. She is coming in at a good time, if she wins, for this economy. What does that mean, the type of policy we would get from a potential President Harris?
I think she has outlined a suite of policies. You obviously have a big question about whether she has the Congress to pass them. There, I'm looking at the Ohio and the Montana Senate races in particular. But I think there's a real question of the sense of urgency that she'll have for governing. You had President Obama and President Biden come in and day one, even before then, really hit the ground running on a recovery policy package. Clinton to some extent, and even going back further than that. But Harris doesn't have that. We don't have 10 to 20 million people unemployed. We don't have high inflation. We have quite stable inflation. We have really strong markets. We have good consumer sentiment. Things are also on the rise. I think we'll see where the Fed lands later this week, maybe before we know the outcome of the election. But Harris is coming in on the backs of a really strong economy. And so her propensity and sense of urgency when it comes to governing might be a little bit slower than we've seen in past Democratic administrations.
And Elizabeth, just to interject, because we're up against the clock here, in terms of the propensity to move with urgency, I'm curious, who survives in either a Harris or Trump administration? Lena Khan and Jay Powell? Do you think they both coexist? J.D. Vance is a bit of a fan of Lena Khan. The billionaire investors or backers for Harris might not be. Does she survive?
I think Lena Khan stays in a Harris administration. I think you also, with respect to the entire cabinet and appointed officials, you've got to look at who you can get through the Senate. The nice thing is you don't have to reconfirm Lena Khan for several years. And so I think there's likely to be less cabinet and agency head movement in a Harris administration if she loses the Senate. If Trump's got the White House and the Senate, I think you're likely to see a lot of movement. And I question, how much sway J.D. Vance has over what Trump cabinets looked like, given his comments on the campaign trail.
Indeed. Well, a lot of industry might see it a little bit differently in terms of the M&A action in this country. Elizabeth, thank you very much. Elizabeth Pancotti there of the Roosevelt Institute with us this morning, counting down to the U.S. election. 24 hours to go. Oil is on the march higher this morning. Iran ramps up the rhetoric on what it's planning to do against Israel. We have the latest on the story right here on Bloomberg Brief. It's Bloomberg Brief. I'm Manish Krani alongside Danny Berger here in New York. Tensions continue to rise in the Middle East as Iran plans its next attack on Israel. The Wall Street Journal reporting Iran is planning the next attack with more powerful warheads and other weapons than before. The country's supreme leader vowing a harsh reaction to Israel's missile strike on October the 26th. Golnar Motovali joins us with this. So, Golnar, the response here is that the rhetoric that's coming from Iran sounds pretty punchy in terms of the retaliation. This was somewhat unexpected. I mean, they expected a response, but the rhetoric is setting the stage for something quite significant, isn't it?
I think in some respects it is, but on the other hand, the rhetoric hasn't changed that much compared to what we've seen over the past few months. I think we're in this kind of strange sort of holding position where both sides are clearly looking ahead at the outcome of the US election. That's my sense. And I think there's a possibility that the way that they've been conducting what looks like fairly calibrated direct attacks and strikes on one another and counterattacks could become some sort of new normal for us since their shadow war kind of came out into the open after October 7th last year. But I think what's critical with Iran's rhetoric today is the fact that they want to continue to keep Israel obviously on alert and to kind of continue this tenterhooks status across the region over what they might do. And I think it's important what's going on in the background diplomatically, what their officials are saying to other officials in Arab countries and neighboring countries in the Middle East.
Just a bit into that, what the discussions look like at this moment as that kind of tit for tat continues in the foreground?
Well, we have obviously this, as you mentioned, this rhetoric that we had over the weekend from Khamenei, the supreme leader of Iran. He said that Iran will deliver a crushing response to Israel's October 26th strike. And at the same time, Iran's foreign minister, he's just finished this kind of back-to-back diplomatic shuffle of quite an intense tour of the Middle East, going to different Middle East countries from Saudi Arabia to Jordan to Egypt, basically seeing everyone he can. And what those discussions have been behind the scenes, behind closed doors between Iran's foreign minister Abbas Araghchi and his counterparts in the region, I think that's crucial and critical to what Iran does in the coming weeks or days.
Golnar, we appreciate the update. Bloomberg's Golnar Motovali there. All right, on to Berkshire Hathaway. Their cash pile reaching a record $325 billion. Its latest results show that the company cut its stake in Apple once again, which helped boost that cash hoard. For more on Berkshire's earnings, let's go to Charlie Wells, who joins us now. So, Charlie, Warren Buffett still has this giant pile of cash. What do we make of it?
I mean, Danny, look, with that giant pile of cash, you could buy pretty much any company in the world, but isn't. A lot of that money is parked into short-term U.S. Treasury bills, which says something about valuations when the world's most famous value investor is parking a lot of his cash in Treasury bills and not even buying back the shares of his own company. So that was something that was really notable out of this third quarter earnings report, that Berkshire Hathaway is not buying back shares. That's something that they haven't not done since 2018.
I mean, they sold over $34 billion worth of equities in this quarter. Look, the big debate is cutting their position in Apple. Is that a lack of comfort by Buffett in terms of holding such an outsized position? Because this was built up during the tenure of Charlie Munger, and since he's passed, they've shifted on Apple. Do we have any clarity around the thinking on that?
Well, man, it's funny you should ask that, because that is the big issue that analysts have been trying to parse since these results came out over the weekend. You know, is this Warren Buffett kind of picking up on some softness in Apple, trying to kind of limit some of the exposure there? Of course, they've had weakness in that ultra-competitive Chinese market. But then on the flip side, you know, you've got the fact that Apple has long been Berkshire Hathaway's top holding. This may be just an attempt to kind of, you know, mitigate some of the ballooning of that position over time and potentially head off some tax hits if they were to sell those shares in a higher tax environment going forward.
Yeah, I mean, it wasn't that long ago in May that he was praising Apple, calling it better than Coca-Cola and American Express. Just within these earnings, I wonder, Charlie, does it give anything a tilt of the hat to the future of Berkshire Hathaway, a company that just for so long has been helmed by Buffett?
I mean, look, Buffett's 94 years old. Let's hope that he can continue along into the future. But you can't spend $325 billion in one day. I mean, you probably could, but that would be quite an extraordinary day. And so if you think about the CEO that's been tapped, Greg Abel, he very likely would inherit this huge cash pile. And I think there's another interesting point that James Shanahan at Edward Jones has made previously, which is that Berkshire Hathaway is going to change, right? It's a company that's kind of shifting out of being kind of an investment company and moving more into this environment, into this iteration where it's an operating company, where it's thinking a lot about kind of earnings optimization. So that is an evolution that we might see going forward.
If I had $142.6 billion, according to Rich Go, at 90-odd years of age, I'd be sur la plage, Charlie. Charlie Wells.
Especially at 94.
At 94. At 94, if I'm still doing TV, somebody just take me.
I hope you are.
Yeah. Well, with you.
Yeah, with me. Till the end, man. It's till the end.
Danny and I will be with you through to the end of the US election cycle. That's for sure.
At the very least.
At the very, very least, we can assure you for this week. Coming up, what else have we got for you? A little bit of markets, a little bit of stocks on the move. There are other stories apart from politics. We'll try and give them to you in the closing minutes of Bloomberg Brief.
It's your Bloomberg Brief. I'm Danny Berger, alongside Manus Cranny in New York. It's going to be an insane week. Let's set you up for it. Americans will be heading to the polls to cast their votes for the next president of the United States. That happens on Tuesday, though we're unlikely to get results right away. Then it's a busy Thursday. We'll have the Bank of England rate decision. That happens in the morning. Then it will be followed by the Federal Reserve and Chair Powell's news conference in the afternoon. Manus, hold on to your seats.
Hold on to your seats. Hold on to your hats. You're right. It is going to be insane here. We've got a little bit of stock movement for you. Constellation Energy falling ahead of the earnings before the market opens. Shares are up 121% year to date. Viking Therapeutics, this is on weight loss. The obesity pill shows promise in a study, an average of 8.2% body weight loss on the 100 milligram dose. And then DJT, which is, of course, Trump Media, falling ahead of the election. It shed about $3.3 billion in October after a 324% surge into the election. The Iowa poll, the reach is large and long. Danny.
Yeah, let's get a quick look on what other assets are moving on that poll. It is yields coming in this morning, and it is the dollar weakening. The Mexican peso stronger by about 0.8% versus a dollar. Surveillance, they'll take it from here.